if a company's con call was symptomatic of what's happening in the sector, then you can very well say that Inox Wind's conference call after the Q4 numbers was just that. It spoke a lot about the changes that the wind sector has gone through, the policy changes that are effective, which might help the sector, and the bullish undertone towards, or the confident undertone towards better execution over the course of the next 2 years and possibly longer by the management. So we thought, let's get in the management here on the show to talk about what is it that they feel about the current landscape on the renewable space and wind energy in particular, and how do they plan to take forward their own plans over the course of the next few years. They've spoken about the rest of the decade, by the way. We'll try and talk about that as well. Devansh Jain of Inox Wind joins in. Devansh, great having you. Thanks for taking the time out.
Thanks, Neeraj. It's a pleasure to be with you on the show.
Thank you. So, there is Q4 results as well and FY23 too, and I'll come to that. But first, a couple of hints that I got from both your investor presentation as well as the conference call that I heard yesterday was that you've spoken periodically about the changes that have happened in government policy, the discontinuation of the e-reverse bidding and what it could have. There is also something that came overnight about the government giving complete waiver of ISTS, and just the change in the confidence of a company like yours from what it has done in the past 5 years to what it plans to do over the next 5 years. Tell us, how is policy impacting the space in your company?
So, Neeraj, we're a fairly young company. We're about 12 or 13 years old. Having said that, the initial phase of the wind sector was driven by something called preferential tariffs, right? Where states used to announce tariffs, which were typically 5 to 6 rupees. Sometime in 2017, the sector moved towards auctions because as globally renewables became more and more mainstream and more competitive, India too decided to move towards auctions. Now, mind you, from about 2012 until 17, Inox Wind had grown from virtually zero to about 5,000 crores of top line. Now, once these auctions happened, the tariffs which were discovered dropped from, say, 5 odd rupees to about 3 rupees. That's typically because you were going to the best wind sites, which were until now not accessible, simply because these were connected to the central grid. Now, once this happened and everyone bid and tariffs were, say, 3 odd rupees, the state simply refused to let us put up projects at 5 odd rupees because they said we'll only buy power 3 rupees. I'm talking of 2017 odd, right? Now, once this happened, all the order books which all the OEMs had, or the way the sector was built was OEMs used to do turnkey projects for all the IPPs, for captive projects, for PSUs, so on and so forth. Now, if there was no PPA, well, that was not our guarantee. Nobody wanted the project because where will you sell the power? So effectively, that led to a complete collapse of the sector. Because also, while auctions were brought into India, the transition of shifting from preferential tariffs to auctions was very painful. And I enumerate. So while the first auction was conducted and the tariff discovered was, say, 3.5 rupees, and mind you, we won almost 50% of the first auction, the guidelines for winners to set up projects under the so-called auctions took 15 months to take up. So for 15 months, you were doing nothing. And thereafter, a big chunk, majority of the green corridor, which is the central grid, was not live, was not connected. So you could build turbines and, install them, but there was no grid to take this out. Now, this was the pain which lasted in the sector for almost 3 years. Had they done this in a more smoother, organized manner, or there was a smoother hand-holding and transition from or grandfathering of the projects which were to be set up under the state policies and then shift over to auctions, there would be no pain. But it was done so haphazardly. And again, power being a central subject, tariffs being a state subject, it was a complete mess. So naturally, in these 3 years, virtually the entire wind sector shut down. Of almost 30 odd players, I would say almost 90% of the players went bust, bankrupt. We had only 4 or 5 players who survived. 3 of them were global MNCs, maybe 2 odd Indian players. One of them took a massive haircut from the banks. We kind of survived by pumping in money from the group and backing it up as promoters. Now, that was the past. That was those 3 years. And as we started coming out of the coma, COVID hit the world. So naturally, a guy who's coming out of coma gets hit by COVID. you can just understand what happened. So for the past 5 years, as I would put it, the wind sector was dead and buried. It was just a matter of time that at some point in time, once COVID was over, the policy issues were resolved over those 2017 to 20, those who would have survived would have ruled the roost. Because the larger renewable energy targets of the government, the Prime Minister's mission was very, very clear. And that's not just for India, but globally, renewables is the most competitive. Globally, virtually every country is moving to massive renewable energy goals. The Russia-Ukraine war only exacerbated the move of countries towards energy security, what we commonly refer to as Atmanirbhar under Modi ji's leadership. And I think what's happened now is over the past 9 to 12 months, what we've done at Inox Wind, we've really taken many strategic actions to ready ourselves for the growth which we foresaw coming in from the coming financial year. So we monetized our O&M business. We listed our O&M company, Inox Wind, not just to raise capital, but we also saw a huge opportunity to go out and acquire a lot of the bankrupt OEM assets which were under their control for operations and maintenance, and also a lot of the unorganized players who had cropped up over the past 5 years. So that business is growing significantly, and it's a very long-term O&M play for us with 50% plus margins. Two, the promoters pumped in almost 600 odd crores at virtually zero interest cost to strengthen the balance sheet. We also raised about 200-300 crores, 400 odd crores across the promoters and two large investors, including Samina Capital, by way of warrants to further strengthen the balance sheet. We've also readied our 3.3 megawatt turbine. I think it's performing exceptionally well. It's exceeded our expectations of that turbine. We should be getting our type certification for that turbine in the next couple of days. And then we can commercially sell those turbines in the Indian market. I think that's going to be a significant game changer in terms of cost competitiveness, in terms of our profit margins. And also, I think it's probably the most competitive turbine in the Indian market. So I think we've readied ourselves for this upcoming change. Naturally, as a group, we're a young, while we may have a legacy of almost 9 decades, as the Inox GFL group, we're about 15 months old. And I think since the incarnation of our group, we've taken a lot of strategic steps to get to where we are. And I think, to sum it up, I don't think, Neeraj, we've ever been as bullish about the wind opportunity as we are today. Not in 2012, not in 2015. I think the opportunity ahead of us is absolutely unparalleled.
Okay, I'd love to for you to paint some color there, but just a couple of policy questions before we move to Inox and what all you've done. So in your presentation, you write that the discontinuation of the e-reverse bidding paves the way for single stage 2 envelope closed bids. And on the call, you mentioned that this policy change opens up space for large investments in the sector. Now, can you kind of qualify this as to why this single stage 2 envelope closed bids process is a smooth one, quick one? What does it do for you? And two, what do you mean by large investments coming in the sector? Do you foresee something like that happening for your company and your projects too?
Look, let's put it like this. The government had a 500 gigawatt plan by 2030. What they've now gone and done, so while they had, over the past 2-3 years when wind was going through pain, they had solar targets and they used to keep announcing a trajectory. What they've done is they've now elucidated a very, very clear 10 gigawatt plain vanilla wind plan year on year. And they've also taken out a calendar that say in May, there'll be a 2.5 gigawatt bid by NHPC, 2.5 gigawatts in say July by NTPC, 2.5 by October. So there's a very, very clear trajectory of the wind tenders which will come out. So larger investors, the global pension funds, a lot of the IPPs who've come in, the larger power players in India have a clear track record that this is how it will move. It's not ki aaj 1 gigawatt kiya, then you go to sleep for 6 months, you'd never know what's happening.
Right.
Again, I wouldn't make too much of an issue out of closed bids vis-a-vis reverse auction, simply because, reverse auctions created disarray in the sector when the sector shut down and all the OEMs were left with massive inventory. So everyone was desperate to sell their turbine and liquidate at whatever price. Today, no one is going to make a turbine to lose money. So frankly, whether you have reverse auction or closed bids, people are going to be supplied turbines by OEMs only if the OEMs make money.
Yeah.
So I'm not going to blow the trumpet on reverse versus closed bidding. Yes, theoretically, closed bidding is slightly better than reverse because, it kind of eliminates if I may use the word satta, lottery kind of system, where everyone starts playing 1 paisa, you less, 1 paisa, me less. Closed bids is a little bit more organized, but frankly speaking, it's not such a big deal, simply because I think OEMs will be supplying only to make money now.
And just follow up there, this waiver of ISTS or interstate transmission charges for 25 years, is this a big deal? Can you explain
Look,
this?
I think for the onshore wind sector, they've already announced this until 2025. And then they have a rack rate for 26 is 25%, then 50%, so on. I think it gives multi-year clarity for people to plan projects. Because you can't have 1 year, 2 year clarity. These are larger projects. It takes 12 months, 18 months to build large projects. What they've announced yesterday is a ISTS waiver for offshore projects and onshore and offshore projects which are used to generate green hydrogen and green ammonia. I think it's a very forward-looking move. It won't have an immediate impact today, but it's a very forward-looking move and gives a lot of clarity, because green hydrogen and green ammonia projects are really going to start coming online from 2025. So you're hearing a lot of announcements. We are very deep in that arena, given our larger group exposure with green hydrogen and GFL. But you're really going to see serious commitments and serious volumes play out 25 onwards. And if they've announced now this trajectory, it gives a huge scope to set up projects. And yes, ISTS charges being waived off substantially adds to the IRR, at least for the next 3 to 4 to 5 years.
Got it. You seem pretty stoked by this 10 gigawatt wind energy annual RE thing, right? Because it gives certainty as well. Now, tell us, what would this mean for a player like you? Because and I'll come to that statement later, but I'm just referring it. In your presentation, you mentioned about how the current order book talks about this massive growth in revenues for you as a company for the next 2 years. Therefore, does this 10 gigawatt annual mean or ensure that you keep on bagging orders to kind of keep up with that pace of growth for the period beyond FY25?
Oh, certainly, Neeraj. I think a couple of things. First, when we talk of massive growth, if you look at our top line for the last financial year, was about 700 odd crores. So we expect that to be a multiplier in this year, number one. Having said that, the peak we've done in India was sometime in 2015-16, where we did about 4.5 gigawatts. And at that point in time, we had about 30 players, but 5 players controlled 80% of the market. Today, you have about 3 or 4 key players, long-term players. I'm not talking about some players who just come to dump their material, go away when their markets boom, or have some old technology, third-grade quality, which needs to be dumped. And, there is a market because some people play the short-term game. But for large, long-term players, I think a 10 gigawatt trajectory is unparalleled. Typically, the Indian wind market was a 3 to 4 gigawatt market. Now, whether we hit 10 or whether we hit 8 or 6, there's a clear trajectory. Tariffs are reasonable. Capital is available. PPAs are being signed upfront, and payment security is there from the central government. A lot of the other regulatory measures the government did on late payment surcharge, on ensuring discoms pay up in time through central government pressures, really aiding to the sector. And I think the power sector as a whole is now on the cusp of a major breakout. And within the power sector, it's all renewables, because there is no fossil fuel-based power which is kicking in. Coming to us, we have a manufacturing capacity of about 1,600 megawatts per annum. Historically, we've been 15 to 20% of the market, because at Inox Wind, we've primarily focused at profitability. Unlike 1 or 2 of our competitors, we've never focused on top line, because what is most important is profitability. There's no point being number one and having massive debts and just losing money. And historically also, we were profit leaders at about 15-16% EBIT margin until 2017. We had the strongest balance sheet in the sector. Our endeavor, again, is over the next 12 to 24 months to have the strongest balance sheet. I think we have a very strong balance sheet today compared to others. But as I also said, over the next 12 to 18 months, our goal is to make this a net debt-free balance sheet, number one. Number two, in the next 12 to 24 months, I think we will be the strongest player in the Indian domain. Some of our global counterparts are facing many headwinds, many debt-related issues. In certain cases, the parent are taking over the subsidiaries. In certain cases, there's a carve out. From an Indian context, there's still a lot of debt, very low promoter holding. We own about 73% of Inox Wind. Our debt is at about 1,200 odd crores net debt, which I think, as I mentioned, in the next 12 to 18 months will be debt free. Our break even is very, very lean because our O&M company also makes a lot of money now. Having said that, we are conscious of the market moving. We're keeping a very close watch on that. We have all the building blocks. We have manufacturing capacity. We have the most up-to-date technology. Capital is not a challenge for us at the group level. We're a $6 billion group at this point in time. We have 2 listed companies on the wind side of things, forget the chemical side of things. So effectively, we will do it piecemeal. And what we've said is our larger objective is to grow, but sustainably, number one. Number two, we will not do anything just for short-term growth. So as I said, our first goal is now to grow substantially, also make ourselves net debt free, and then we'll press the pedal further. If you notice, what we've done also in the past 12 months, we've primarily focused on the retail market and the public sector enterprise market, simply because we said we need stability over the next 12 to 18 months. We don't want to take a lot of orders which are 2 years ahead, get into fixed price contracts, and then, something goes wrong and then you lose your shirt or make very low margins. We also didn't want to take any financial risks. Sometimes IPPs are not able to tie up their financing well in time, so on and so forth. So we said, let's tie up our visibility for the next 12 to 18 months. Now that we've already done that with a significant chunk of orders from NTPC and retail, we are now focusing more and more on equipment supply, which is primarily the IPP market. We're doing it at our terms and conditions. We are not going to do things to just bag orders. We're not going to do things to lose our shirt, make low margins, to take bank guarantee headaches. I think we're really changing the dynamics in the sector. Because frankly, for the past 5 years, we've done nothing but gift money to IPPs and other people. And I think the time has come that the ecosystem needs to work. Otherwise, you're not going to have suppliers in this country.
Sure.
And I think we're doing that very sensibly, cautiously. But yes, we are a very ambitious group. Inox Wind was very ambitious, and hence we grew from 0 to 5,000. I think in the next 12 to 24 months, you're going to see a completely new avatar of a very, very strong and a very profitable Inox Wind.
Okay. So let me try and break this up into FY 24-25 and then maybe beyond that, right? So I read the statement, as I said, in your investor presentation, wherein it says that order book is expected to translate into revenues of 7,000 crores over the next 24 months. And your order book, as it stands, kind of gives that indication as well. Would this growth be back-ended? Because you're coming out of that COVID coma, you've done 750 crores in FY 23, and then the number of 7,000 crores over 2 years seems a fairly large jump. So would this be back-ended over a 24-month period? Can you give us some idea about what will lead to this growth?
I won't get into quarterly pressures, but you're going to see a significant jump quarter on quarter, beginning with Q1 of the current financial year.
Which I know, Devansh, because you mentioned in the con call that you wish that you would be announcing Q1 results instead of Q4. So that was a giveaway that your Q1 is going to be strong. But I'm still trying to understand, how does this run rate expand?
Look, Neeraj, I think to put a more qualitative answer to it, Q1 is going to be fairly large compared to the past 4 quarters. Q2 should be on similar lines, simply because Q2 typically becomes peak monsoon. And I think Q3 and Q4 will become larger. Now, I'm not going to say whether the next 2 years in terms of 12 months and 12 months are going to be equally weighted. All I would say is we are looking at a significant jump over the course of this financial year. The next financial year will be bigger than this financial year.
Okay. And this confidence about EBIT margins going back to 14, 15, 16 odd %, whatever the number may be, that comes as a result of operating leverage alone, or are there some other factors to this? Because there too, there is a quantum jump that you were talking about.
I think we should get back to our historical 14, 15% in the next financial year, not the current financial year, for 2 reasons. One, obviously operating leverage will kick in this year as well as next year. 2, we have our new 3.3 megawatt turbine, which is far more competitive, is far more, has far more juice, as opposed to the 2 megawatt product, which is now kind of outdated. So over the course of this financial year, almost 50-60% of this year's supplies are our 2 megawatt orders. For all the old orders which we have from NTPC and retail and some of the other IPP orders which we're finishing this year. The 3 megawatt is really kicking in from H2 of this financial year, whereas next financial year is primarily all 3 megawatt.
Got it. Okay. And hence the optimism about that. Now, just a quick word, and then I'll come to a couple of nitty-gritties. We'll probably take about 10 more minutes of your time, Devansh. One is trying to understand what happens beyond FY25. Now, there is some color that you've given about this 10 gigawatt and what you hope to achieve, etc. When I look at the last 12 months, some of your competitors have won fairly large orders as well. You mentioned about how you want to change the nature of the game for you, IPP and supply of turbines, as opposed to just doing what you have been doing. Can you tell us what happens beyond FY25 when you've exhausted, quote unquote, excuse me, I'm not, for lack of a better word, exhausted the current order book that you have at hand?
Look, Neeraj, you must understand. So this is not the wind sector is not a sector where you build 10-year order books. The peak order book you can build is 18 months because that is the longest visibility you get to execute a project. So for example, IPPs typically give you 9 to 12 months. PSUs give you 18 months. And hence, as I mentioned, we focused on PSUs. Retail is typically a quarterly game. They give you quarterly orders, 20, 50 megawatts, you keep doing that. So effectively, you can't have a visibility beyond 18 months, 24 months. I am not talking about MOUs, LOIs, or just framework agreements, because those are just intents. Yes, they want to do it. The price is not fixed. The technology can change if you change. Depends at what tariff they win. When I talk of firm order books, are those which, irrespective of what happens, is bound and married to you. Having said that, the government, as I said, has announced a 10 gigawatt trajectory year on year. Now, this has happened after we've already built our order book. Now, whatever tender comes out, the first tender is in May, for example. Now, when you win that, then it takes 30 days to get awarded, 30 days PPA. So effectively, let's say September is when you'll have the PPA and the first order won. Now, these guys thereafter have 18 or 24 months to execute that project. That takes them to, say, typically September 2025, which takes you to the financial year 26.
Sure.
Now, if you look at it, today morning, we announced a new 150 megawatts order from NTPC, which was not part of the order which we announced on Friday with our conference call. Now, this is not something which will immediately execute. We may do a part because, it's a new technology and so on and so forth. But you'll have, on a quarterly basis, supplies being done, new orders kicking in. So you'll have a rolling order book. So it's not as if the 1100 odd megawatt order book which we have will become zero over the next 24 months.
Of course not. No, I didn't mean that. Yeah. Okay. Yeah, but
we'll keep adding to our order book on a quarterly basis. Again, as I mentioned, we are doing it systematically. We want to keep adding quarterly so that given if there's, God forbid, another COVID wave globally, or there's some crazy change in metal pricing or shipping pricing, we are covering ourselves quarter on quarter.
Sure.
Right? Okay. I don't want to take all the orders in one quarter for the next 12 months and then get stuck if steel jumps 40% or shipping triples. I don't think that's going to happen, but we are taking quarterly movement. And I think we're spreading our risks. We've analyzed the whole business for the past 5 years, trust me.
Sure, of course.
The minutest of risks we want to cover to the best of our ability.
It's my job as a journalist to try and probe every angle, and which is what I'm doing. But I'm just guessing, Devansh, what you're trying to say, and please correct me if I'm wrong, that every incremental piece of execution or ordering that you do, whichever shape or form you do it, you want to ensure that you do it with a particular kind of profitability, particular kind of ROI, particular kind of EBIT margins. Correct. Would that be a fair assessment?
Correct.
Okay, great. Last two questions. One is on the debt profile. Now, you repaid, if I'm not wrong, maybe because by virtue of the promoter entity giving that 600 crores, which you said on the call again is nearly zero interest coupon bearing bonds. Now tell us, the statement was that you will become net debt zero company by the next financial year. You mentioned 12 to 18 months. So you therefore target that you will become net debt free within the 12 to 18 month period starting now. Would that be a fair assessment?
That's right, Neeraj. So if you look at it, as of March, our net debt would be close to about 1250 odd crores. Excluding a 50 megawatt SPV, which we are holding, which we'll be flipping in the near future. Now we have 1250 crores of net debt. I think from monetization of certain assets, plus profitability of this year, as well as the working capital buildup, which will happen over the course of this year, fund versus non-fund based. I think over the next 12 to 18 months, we should become net debt free. I mean, give or take one quarter, give or take 100, 200 crore here and there. We are very, very clearly focused on this. And I think there are no guarantees in life, but I think we are very, very clear and confident that we will be achieving that.
Okay. And I heard on the call that you've appointed a valuer for merging Inox Wind with Inox Wind Energy, subject to the board decision. I would suspect that it takes a particular timeline. Would love to know what that might be, part one. And part two, I'm guessing then that the debt gets subsumed if the two companies get merged, right? Because then it becomes quasi-equity converted into equity.
That's right, Neeraj. So again, IWEL, which is the holding company of Inox Wind Limited, has no debt. They are quasi-equity instruments which will get cancelled out subject to the board approving the merger. Now, as a group, we'd always said, post the realignment in our larger group and in our new avatar, we had said once Inox Green IPO is done and a lot of the other strategic actions are done, at the right time, the board will consider the merger of these two entities. There's no point having two listed entities. The listed entity happened as a result of the demerger of the wind business from Gujarat's Fluoro. So I think the board has appointed merchant bankers and valuers to evaluate that. I would tend to think over the coming month, the valuers and the merchant bankers should be able to present their assessment and their recommendation to the board. And I think the board, in their wisdom, will decide on whether to go ahead or not go ahead. Once that's done, naturally, the balance sheet of Inox Wind will further get strengthened because effectively it becomes a lot of more equity coming into the balance sheet of Inox Wind, number one. Number two, the so-called minority sitting in IWEL, which is the holding company and so on and so forth, gets eliminated. So they get holding of Inox Wind. Inox Winds get a better pedigree of shareholders. And I think Inox Wind now will come more in focus because for the past 5 years, obviously with the sector dead, nobody wanted to touch this stock or nobody wanted to be associated with the wind sector. I think it should be subject to the board approving. I think it should be a very, very positive impact and a positive move for Inox Wind as well as for all our minority shareholders.
Okay. So subject to opportunities presenting themselves as we wrap up this conversation, Devansh, and I presume that from what you've told me, you believe that opportunities are presenting themselves. You see a clear path of very strong runway of growth for not just the next 2 years, but arguably till 2030.
Oh, yes, Neeraj. As I mentioned, I don't think I've ever, and I'm a very passionate, bullish person, but I don't think I've ever been as bullish about the wind sector in the history of Inox Wind as I am today.
What are the risks to this theory? Sorry, Devansh. Sorry, just wondering. I mean, surely you think of what could upset the apple cart. Just let's wrap up with that.
Look, let's put it like this. I spoke of 10 gigs, but in our scheme of things, we are really talking of getting back to our historical numbers, which may be 4,000-5,000 crores of top line, right? I mean, if the market becomes 10 gig, we probably would end up doing almost 15,000 crores of top line, right? With our market share. So I think you could, we've seen so much negative over the past 5 years in the sector that frankly, what's going to go wrong? You have captive, you have RTC, you have hybrid, you have PSU tenders, you have the SECI tenders. So the market, worst case, will be a 3 to 4 gigawatt market as it's always been, which is more than enough for what we're doing currently or what we used to do historically, number one. Number two, by eliminating debt, my break-even is negative. And what we did was make Inox in a separate play, which is a very long-term annuity business. It's a COVID-proof business, making a lot of money. I personally don't think there are any challenges in this. You could have a margin impact. Instead of say 15%, we may come down to 12%, or 12 may become 11, depending on how steel prices, shipping prices, what may happen globally, right? If a COVID wave comes in. But I mean, even to that extent, we've tried to do a quarterly movement in our order book so that we cover any movement rather than taking all orders today. But if you ask me, Neeraj, I think for the past 5 years, everything which could go wrong went wrong. And from that learning, we've really built our strategy or have tried to put in place the building blocks such that we never face any challenges in this business. Yes, we may make less money, but we will never lose our shot. And I think we are ideally positioned to capture the growth which may come in the sector as we move forward.
We wish you all the best for that. And it's great for the country if wind energy actually blossoms even further. Devansh, thank you for an elaborate explanation of all that's happening within the space and within your company. and all the best for the quarters ahead.
Thank you, Neeraj. It was a pleasure to connect with you.
Likewise, and viewers, thanks for tuning in.